This is INO FOREX. You are watching INO FOREX. Welcome back to the channel. If you are new to forex trading or you are struggling to understand how the market really moves, then this video is for you. Today, I will show you the different parts of the candlestick, explain how the market creates pullbacks, and how understanding those concepts can help you make better trading decisions. These are some of the most important foundations every beginner should know before pressing a trade. So make sure you watch this video until the end because each section builds on the rest, and you don't have to miss the valuable tips waiting for you. If you enjoy this content and you want to learn about forex trading, don't forget to subscribe to this channel and turn on notifications so you never miss the new lesson. So let's get started. I'm going to begin by explaining you the part of the candlestick. To know the part of the candlestick is the basic part, is the very important part, the basic thing you need to know before starting a trading. So watch carefully. I am going step by step teaching you how candlestick moves and the main part of the candlestick. So as you see on your screen, we have two candlesticks. First candlestick is a bearish candlestick and the second candlestick is a bullish candlestick. So I hope you understand. So if you see a bearish candlestick, it means the market moving in a downtrend. And if you see a bullish candlestick, means the market moving in uptrend. The bearish candlestick is red and the bullish candlestick is green. So I'm going to explain you every part of this candlestick. So let's start with the bearish candlestick. This is a high of the candlestick and this is a low of the candlestick. So I think this is very easy to identify the high of the candlestick and the low of the candlestick. This is a high of the candlestick and this is a low of the candlestick. So the candlestick has a two main part. So it has a body, this one called a body. Candlestick has a body, this is a body of the candlestick. And this line is a wick of the candlestick. We call it a wick or shadow. This is a wick or shadow. So how candlestick create this wick? This wick means, so in the market candlestick does not stay on the one point. It moves like this from one price to the another price. So this high of this candlestick means this is a higher point market reached to, and the low of this candlestick means that is the lowest point market reached to. On the bearish candlestick, market opens from this point and closes to this point. This is opening price and this is closing price, and this is a body of the candlestick. So let's go to the bullish candlestick. So the part of the bearish candlestick are the same as of the part of the bullish candlestick, except only one difference. The difference is the opening price and the closing price. Opening and closing price of the bearish candlestick are opposite from the bullish candlestick. On the bearish candlestick, the opening price is above, and on the bullish candlestick, the opening price is below. The bearish candlestick, this is opening price, and this is a closing price. When the market is bullish, the candlestick open from this point and close to this point. So as I told you, this is a wick of the candlestick, or we can call it a shadow. This is a high of the candlestick and this is a low of the candlestick. And as I told you, candlestick doesn't stay on one point. It moves from one price to the another price, and it opens from this point and it moves and it closed to this point. So the high of the candlestick means this is the highest point our candlestick reached to, and finally closed to this point. And the low of the candlestick shows the lowest point our candlestick reached to, and this is a body of the candlestick. So I think you have understand all those parts of this candlestick. The next thing I'm going to show you how candlestick creates a pullback. How can identify the pullbacks in the market, the variety pullback. Many traders make the mistake when they mark the pullbacks. So let's go together and show you how candlestick creates the pullback. So as you know, market is not moving in the straight line like this. As you know, market moves doing the waves like this. So market moving, creating the pullback. It push up and then create the pullback. So how can I identify the variety pullback in the market? This is what I'm going to show you. So to find the pullback is simple. You follow one thing on which I'm going to show you. As you see here, I have an example. In the market, we will confirm that market made a pullback if a candlestick breaks a previous candlestick low. As you see on this chart, here we have 3 candlesticks. we have one bullish candlestick followed by two bearish candlesticks. So those candlesticks create a pullback. So why am I saying that those candlesticks create a pullback? Look at this candlestick and this one. This is a low of the candlestick and this is a high of the candlestick. So, and the next candlestick, this is a low of candlestick and this is a high of candlestick. So, and as you see, a candlestick breaks a previous candlestick low. This candlestick breaks a previous candlestick low. So I want to show you something. So for example, if this candlestick reaches to this point, we will not say that the market made a pullback. Why? Because this candlestick didn't take a previous candlestick low. We will confirm a pullback in the market if the low of this candlestick takes the previous candlestick low like this. Like this. So I'm going to show you another example of invalid pullback, which confused many traders. So look at these three candlesticks. On this example, as you see, this candlestick breaks a previous candlestick low. As you see, candlestick breaks a previous candlestick low, but this is not a valid pullback. Why? Let me show you. Here we have a bullish candlestick. This is a high of a bullish candlestick and this is a low of this candlestick. So as you see, this candlestick didn't take a low of the previous candlestick. And the high of this candlestick didn't take the high of the previous candlestick. So the main candlestick needs to be broken the low to confirm the pullback is this candlestick. Because in this case, the high and the low of this candlestick, as you see, are covering all those candlesticks. Those candlesticks are between high and the low of this candlestick. So this is invalid pullback because among of those pullback, there is no one which has taken a low of this bullish candle. But for example, if high of this candlestick has taken the high of this previous candlestick, in this case we will focus to this candlestick and waiting this candlestick to break the low of the previous candlestick to mark a valid pullback. So but in this case, as you see, this candlestick didn't take a previous candlestick high. That's why this candlestick is a main candlestick. We focus to wait if market will break its low to confirm a pullback. So I think you have understand the difference between this case and this one. I think you have understand the valid pullback and invalid pullback. So let me show to this chart how you can identify the valid pullback and invalid pullback. As you see here, market pushed up, create a pullback, pushed up, create a pullback, and then pushed up and create a pullback. But all those pullback are not a valid pullback. So let me start here. As you see, market pushed up and create a pullback. This is a valid pullback. Why this is a valid pullback? Look at this candlestick. As you see, this candlestick breaks a previous candlestick low. So this is a valid pullback. And then market again pushed to the upside and create another pullback. Why I mark this as a pullback? As you see, market breaks a previous candlestick low. Market takes previous candlestick low. Again, market pushed to the upside and then create a pullback. But as I told you, this is not a pullback. This is not a valid pullback. Why? As you see this candlestick, look at those bearish candlestick. There is no candlestick which has taken the low of this candlestick. That's why this is not a valid pullback. Why we are focusing to this candlestick, as I told you, because as I told you, those candlesticks are between the high of this candlestick and the low of this candlestick. That's why we focus to this candlestick. But for example, if high of this candlestick has broken the high of the previous candlestick, in this case we will mark a valid pullback, because now we are focusing to this candlestick because the high of this candlestick is higher than the previous candlestick high, because it breaks the high of this candlestick. So in this case, this is a valid pullback because this candlestick breaks a previous candlestick low. Let's back to our original chart. So right now we don't have a pullback because those candlesticks are between the high and the low of the previous candlestick. So this is not a valid pullback. So again, market continue to push to the upside and create a pullback. Why this is a pullback? Because market breaks a previous candlestick low. So this is a valid pullback, and then market again pushed to the upside. So I'm going to show you all those things to the live chart so that you will be able to identify clearly valid pullback and invalid pullback on the live market. So we are moving to the live chart so that you will be able to identify the valid pullback and invalid pullback. So let's start from here. Here market pushed to the upside and create a pullback. So why we say this is a pullback? Because market breaks a previous candlestick low. Market pushes the downside and made another pullback. Why this is a valid pullback? Because market breaks a previous candlestick high. So this is a valid pullback. So again market pushed to the downside and create another pullback. So why we say this is another pullback? Because as you see, market breaks a previous candlestick high. I think, let me show you clearly. As you see, market breaks a previous candlestick high. So this is a valid pullback. This is a valid pullback. It's a small pullback. Again, market pushes to the downside and then create another pullback. Why this is a valid pullback? Because market breaks a previous candlestick high. Again, market pushes to the downside. Again, market pushes to the downside and create another pullback. This is a valid pullback. Why? Because market breaks a previous candlestick high. Again, market pushes to the downside and create another pullback. This is a valid pullback. Why? Because again market here breaks a previous candlestick high. So again market pushes to the downside, create another pullback. Because market breaks a previous candlestick high, again market pushes to the downside, create another pullback. Again market pushes to the downside, create another pullback. Again market pushes to the downside, create another pullback. Again market pushes to the downside, create another pullback. This is a pullback. Why? This is a small pullback because market breaks a previous candlestick high. This is a valid pullback. Again market pushes to the downside and then market again create a pullback. Again market create another pullback. So let me show you something. This is not a valid pullback. Why? This is not a valid pullback. Why? Because look at this candlestick. Look at this candlestick. As you see, this is a high of this candlestick and this is low of this candlestick. As you see, those candlesticks are between high of this candlestick and the low of this candlestick. So that's why we focus to this candlestick. So because among of those candlestick there is no candlestick which has taken a low of this candlestick. So that's why we will not mark this pullback as a valid pullback. So this pullback is not a valid pullback, even if this candlestick has broken the low of the previous candlestick. Because of all those candlesticks are between the high of this candlestick, that's why we're not marking this as a valid pullback. But for example, if this candlestick has pushed it down and breaks the low of this candlestick, in this case we mark this pullback as a valid pullback, because as you see, this low of this candlestick breaks a previous candlestick low. So this is not a valid pullback. So again market continue to push to the upside and here market create another pullback. Why this is a valid pullback? Because market breaks the previous candlestick low. Again market push to the upside. This is a valid pullback. Those are small pullbacks and market create another pullback. Again market push it up, create another pullback, and then again push down, create another pullback. Market, this is another pullback. Let me explain you this scenario. Those are pullback because of market breaks the candlestick low. That's why you mark as a pullback. And this one is a valid pullback because market breaks a previous candlestick high. Again, this is a valid pullback because market breaks a candlestick high. And then this another pullback because market breaks previous candlestick high. So I think you have understood how candlestick create a pullback. I'm going to show you the other few examples. Again, market push to the downside and then create another pullback, and then market push to the downside. Why this is a pullback? Because as you see, those candlestick breaks the previous candlestick low. That's why I mark this as a pullback, and the market again push to the upside. Why this is a valid pullback? Because market breaks a previous candlestick high. Again, market pushed to the downside, create another pullback, again push to the downside, market again market push to the upside, so create another pullback. But as you see, this is not a valid pullback. Why? Because as you see, this is a high of the candlestick, this is the low of candlestick. All those candlesticks are between this high and this low. So among of this candlestick, we don't have any candlestick which has taken this candlestick low. That's why this is not a valid pullback. So from here to this point, we don't have a pullback. Market pushed to this point, and then here market create another pullback. Market pushed to the downside and reached it to this point. I think you understand why this is not a valid pullback. As I told you, this is a high of the candlestick and this is a low of the candlestick. Or this candlestick, you don't have anyone which has taken the previous candlestick high to mark a pullback. So again, market push to the downside and create a pullback. Why this is a pullback? Because as this candlestick takes a previous candlestick low, so this is a valid pullback. Again, market push to the upside. Market push to the upside and then create a pullback. Again, market push to the upside. So I think those examples are enough. If you are not understand, you can watch this video to understand better how you can identify the valid pullback on the chart. So to know all those concepts you have seen, the part of the candlestick, the pullback, how candlestick create the pullback, to understand all those things is very helpful in your trading foundation. So step by step, I'm going to release the video teaching you from the basic skills to the advanced. So make sure you have subscribed. You don't need to miss any of our video. I'm going to end my video. So I thank you for being with us. See you to the next video.